Hey guys, you've joined us live here on Moneycontrol, and I'm Manisha Gupta. We're going to be talking about the metal prices today because after 6 or 7 weeks of continuous decline, we've seen the metal prices headed for a weekly gain for this one. One, it has been about strong China PMI data, better than the street expectation and better than the previous month as well. Atlanta Fed president has talked about a rate hike of about 25 basis points, which augurs well with the market there. And then, if you look at overall across board, whether it has been about precious metals and base metals, we are headed for a weekly gain. Gold prices are headed for a first weekly gain in 6 weeks, and we have seen 1.5% gains coming for the gold prices. Iron ore prices also have seen some strength come back in here. Remember, there was production curbs because of pollution in China provinces, but we do understand that Handan and Tangshan provinces have now opened up these curbs, and there is restocking and demand coming back for iron ore. The steel industry is back in action, and that means higher premium and higher demand coming in for raw materials in the markets there. The air quality in China also seems to have improved, so has the demand, and that is positive there as well. And then when you look at the transaction of construction steel products in the country on a week on week basis, we have seen a jump up of nearly 22% on that, and that is quite clearly an indication of demand coming back here. Take a look at the report card then, and after 6 weeks of decline, we've seen 1.5% of gains come in for gold and silver prices. Copper is up 3.5% in the last 1 week. We've seen aluminum prices gain up by 4%, and platinum is up by 7%, clearly outperforming the whole of precious metals and base metals in sense of gains there. What the street will now watch out for is the US non-farm payroll data that comes in today. If the numbers are strong, then the markets will see a knee-jerk reaction on the higher side, but that will also mean a possibility of higher interest rate hikes. So eventually, it's not going to augur so well for the industry. But an even bigger event is going to be the China annual meeting of the National Party Congress. Now that starts on Sunday, and with the kind of push that we've seen come in from the industry and from the China as a political party, the expectation is that we are going to be looking at better stimulus measures, more thrust towards investment and infrastructure, and more liquidity. China has continued with near record interest rates on the lower side, and that has been supportive for demand coming back into the market. So that's going to be yet another thing. There are Chinese economic targets going to be set for the next 5 years from 2026 to 2030, and the industry is expecting a lot of leverages and a lot of thrust push coming in sense of economic consumption, and that also could be positive for the metal prices going forward. The feel from the industry is that for the month of March, it's going to be perhaps 3% down to 5% on the higher side, is how we could be looking at the metal prices going forward from here.